Okay guys, look, the SBA just made one change effective as of July 4th, 2026 that could literally double the amount of capital that your business qualifies for. And I'm not exaggerating here. We're talking about a potential path of up to $10 million of government-backed funding that did not exist 2 weeks ago. If you've ever been told that you max out your SBA eligibility, I need you to watch the entire video because the answer may just change. In my last video, I'll walk you through how I helped a client secure $900,000 in 0% interest funding with no tax returns, no interest payments, none of that. And that video is a few days old and people are already in my DM asking, Felix, is there more? Is there a next level above that? So the answer is yes. And it just got a lot bigger because while I was putting together that video, the SBA quietly dropped a policy change. And I'm going to be honest, stop me in my tracks. Effective as of July 4th in this year, there is now a path up to $10 million in government-backed funding that did not exist as of last month. My name is Felix. I help business owners access the capital that they actually deserve, not just 0% interest credit stacking, but real institutional money that builds real equity. And this change is the kind of shift that's happening once every decade. So in this video, I'm going to break down exactly what has been changed, who qualifies for it, how to use it, and the next move that you need to make before your competitors find it out first. Okay, so let's just start with the facts. The SBA has two main loan programs, the 7A and the 504 loan. They are all-your-purpose working capital loan, which includes equipment, inventory, real estate expansion, you name it, up to $5 million. The 504 loan, on the other hand, is specifically for major fixed assets like commercial real estate and heavy equipment, also up to $5 million in this case. Now, up until July 4th, as of this year, those caps were standalone, meaning even if you qualify for both programs, the SBA will treat each loan as its own isolated thing, and you can't really stack them. So here's a new rule. The SBA just announced that businesses can borrow up to $10 million total across both programs combined. So you can take out a 7A loan and a 504 loan and stack them among each other. $5 million plus $5 million, $10 million in government-backed funding. So that's the change. It sounds simple. Now the implications are massive as well. But before I tell you who benefits and how to use it, I need to give you one piece of context that makes this even more significant. The SBA loan cap haven't really moved since 2010. Think about that, 2010, and that's 16 years ago. Adjusted for inflation, the $5 million cap should be worth $7 million today. So in real terms, the SBA lending has been shrinking, not growing for over a decade. The change in the Trump administration saying, we want American business funded, we want manufacturing, we want growth, and they double down specifically on manufacturers if your business is in manufacturing. The SBA literally waived all of the fees for you for the fiscal year, zero upfront fees, and that's not a small deal. But here's the big thing about the policy change like this. The people who move first are the people who win. The banks don't send out newsletters, the SBA don't run Instagram ads, the information travels slowly from institutions all the way down to us as experts, and by the time your competitor finds out about this and get their application together, you could already been approved. So let me tell you who is this exactly built for. There are 4 types of business owners who need to hear this immediately. Number 1, the businesses that already has an SBA loan. If you already have a 7A loan and you thought you were done, you're not. Now you can have a layer of 504 loan on top for real estate or equipment purchases. The 2 programs serve different purposes, and now the government is explicitly allowing you to maximize both. Number 2, the business owner who were told $5 million is the max. If you went to a bank, got approved for a 7A at $5 million, and then they told you that was pretty much the ceiling, call them back this week because the ceiling has basically changed. Number 3, the manufacturer or industrial businesses. Now, the policy was announced by the Trump administration specifically as part of a push to rebuild American manufacturing. If you're in manufacturing, constructions, distribution, or anything capital intensive that was written with you in mind, then this loan is also for you. Number 4, the growth stage of a business that needs both working capital and real estate. Say you're expanding your restaurant business. You need cash to hire, purchase inventory, also to get into a new leasing agreement, or even consider purchasing real estate to build that restaurant on. That's a 7A. You also need to have equipment and building. For equipment or purchasing commercial real estate, that would be considered a 504. Before, you had to choose to get creative. Now you can apply for both, and that's $10 million in infrastructure. If you are in any of these 4 categories, If you are in any 4 of these categories, I need you to stay on this video because the next section is where I walk you through the actual strategy. And look, before I get into the strategy, let me just tell you this. The fact that you're watching this video right now, that's already an advantage because most business owners are going to find out probably 3 months down the line when their accountant mentioned it. So you're finding out today, which is going to help you to win. Okay, here's how you actually position yourself to take advantage of the new combined limits, and I'm going to give you 5 steps. Step number 1, know which program you need first. The 7A and the 504 serve very different purposes. The 7A is flexible, working capital, equipment, acquisition, refinancing debt, and the 504 is specifically for commercial real estate and major fixed asset purchases. And it requires you to go through what we call a certified development company. And it requires you to go through something called a certified development company, also called a CDC. The most powerful combination I'm seeing right now is using the 7A for operating capital and the 504 to purchase commercial real estate. You buy your building, you own your own space, and you still have cash cushion to run and grow the business. That combination is now fully accessible under the new $10 million combined cap. Step 2. Get your financials in order, not later, now. SBA loans require heavy documentation. I know some of you guys came through my channels that talk about no doc, no income funding, and look, that stuff has its own place. But the SBA are institutional capital at institutional rates with great terms. You're going to need documents for this. So get your business tax returns for the last 2 to 3 years, your personal tax returns, profit and loss statements, balance sheet, and your business bank statements all together. And if you're not profitable on paper, we need to have a different conversation. But if your numbers are solid, this is your moment. Step number 3, find a preferred SBA lender, not just any bank. This is one of the biggest mistakes I see, where people are walking into a local community bank that does 2 SBA loans a year and wonder why the process takes forever. The SBA has a program called the Preferred Lender Program, and these are the banks that has delegated authority to approve SBA loans faster and with less red tape. Chase, Wells Fargo, US Bank, Live Oak Bank, these are the names you want. I'll do a dedicated video on the exact lender list, but for now, let's start with the preferred lenders. At number 4, understand the stacking logistics. Here's the thing about using both a 7A and a 504 loan. They are separate applications, separate approvals, and separate lenders. The 504 require a CDC as the SBA middleman, while the 7A comes directly through your bank. You might need to coordinate both approval processes simultaneously. While this is doable, it does require someone who has done it before, work with a SBA specialist broker, or a loan officer who has experience with dual program transactions. At number 5, move before your competition. I said this already, but I'll say it again because it matters. SBA loan volume hit a record high last fiscal year, 84,000 issue loan, $44.8 billion in capital deployed. So lenders are active, appetite is there, and the new combined cap isn't going to stay a secret forever. Applications that come in that are well prepared to prefer a lender in the next 60 to 90 days are going to, when the policy is brand new and the lenders are still learning how to apply, which often means they're more favorable, not less. So let me paint a picture of exactly how this plays out in real life, because I want this to be concrete. Say you have a 7-year-old manufacturing business, you're doing $2.5 million in revenue, and you want your facility right now. 8,000 square foot, and you're paying $18,000 a month. That's over $216,000 a year, and you're building zero equity. Your equipment is aging, and you need $500,000 in new machinery to hit your capacity targets. Old world is you go to a bank, you approve for a 7A loan, maybe up to $2 million at the combined cap. You purchase the equipment, refinance some toxic debt that you might have, but you're still renting. You don't have enough room in that single loan to also purchase the building. In the new world, which is happening today, you can go through a 504, do a CDC to purchase a commercial property. And let's just say it's a $3.5 million building. Your down payment under the 504 is 10%. That's $350,000. The SBA backstop 40% of that, and the bank covers 50% of that. Your 504 loan portion is $1.4 million. Then separately, you get the 7A loan in working capital. Total SBA exposure under $3 million. Combined impacts, you own the building now, you have cash funded operation, and your monthly payment on the SBA loan versus your old rent likely about to be the same or even a little bit less. But now you're building $3.5 million in equity instead of writing checks to your landlord month over month. This is fundamentally a game changer for your business and is now accessible in a single funding sequence because of this policy change. Now, I know some of you guys are thinking about the objections, so let me address the 3 that I hear the most. Look, Felix, my credit isn't the greatest. Beauty about SBA loans is they don't really require perfect credit. Lenders want to see a minimum of FICO score of above 650 for most 7A loans. Through some programs, they might even go a little bit lower. More importantly, the SBA is looking at your overall financial picture, your revenue trends, your debt service coverage, your industry, and if your business is healthy, imperfect personal credit is often workable. Look, Felix, I just started my business. That's another big objection. The SBA will approve over 8,900 startup loans in the last fiscal year. Startup loans does exist. They're harder, but they're also real. If you're a business owner that's new, the 504 might be a little bit harder to access than the 7A, but there are SBA microloans, SBA express loans, and credit building strategies we can layer on top of it. Subscribe to this channel, and I'm going to do a dedicated video on getting SBA funding as a new business. Felix, this sounds super complicated. Look, it is complex than walking into a bank and getting a credit card, yes, but this is also not as complicated as a lot of people make it sound it to be. The SBA approved over 1,000 loans every day for the last fiscal year, and these deals gets done. The key is having the right information and the right team to help you out. So here is where I land on this. The SBA just handed business owners a once-in-a-decade opportunity. The loan cap that haven't really moved much since 2010 just has doubled. Stacking is now explicitly permitted. Lender appetite is at a record level, and most business owners have absolutely no idea that this happened. And if you watch through the entire video, you're already ahead. And the question to you now is, what are you going to do with that advantage? Here's what I want you to do. Drop a comment down below of which of these 4 categories that you fall under. Already have an SBA loan, we're told $5 million was the max, you're in manufacturing, or you both need working capital and real estate for a business that you've been running for quite some time. I'll read every comment and I'll respond. If you want me to personally walk you through the specific situation, secondly, the link to book a funding strategy call with my team is in the description. We look at your financials, your business structure, your goals, and tell you exactly which program you will qualify for and in what order to approach them. The call is free. Third, subscribe and hit the bell. I'm going to drop a full breakdown video on the top preferred lenders, SBA lenders, and a separate video specifically for new businesses and startup navigating SBA. So you don't want to miss this. Guys, the money is available. The rules just change in your favor, and the only question is whether you're going to move or wait. Again, my name is Felix, and I'll see you in the next one.